Hello all, welcome to Value Trades channel. In the previous video, we have spoken about the steps for the strategy and I hope that you all have took the screenshot of this and we have to understand, and as I have promised that in the next video I will be showing you the number of opportunities that the market can give us on a monthly basis. Matlab, if someone is following this strategy, how many opportunities would a market give according to this strategy? So let's dive into it. So here you can see the first opportunity that was created was on 50,000 put, which happened on 6th of January. When it broke the previous day high, it went for achieving all the targets 1, 2 and 3 respectively with a risk to reward of 1:15. Okay, so this was the first opportunity that was created on 50,000 put of 30th January. Okay, let's look into the next opportunity. This is the second opportunity that the market has given, which happened to be on 47,000 put, okay, and with the risk to reward of 1:12. Once the previous day high is broken, it made against a risk of 8 rupee 35 paisa, which was a very little risk, against which a profit of 129 rupees was made on that given day, and it happened on 13th January on 47,000 put. So let's look at the next opportunity. So this is the next opportunity that was created, and it was created on 49,000 call, which happened to be on 28th of January against a risk of 25 rupees, wherein once the previous day high was taken out, it rallied to 232 rupees of reward, which stands out to be against 25 rupees of risk. The reward was 232. So the risk to reward was 1:10, and it happened on 49,000 call on 28th of January. Let's look at the next opportunity that it has given us. So this is the next opportunity that it has given us, wherein this happened on 48,000 put, wherein against a risk of 31 rupees after breaking the previous day high, it gave a reward of 140 rupees, which is 1:5. So this is the fourth opportunity that the market has given, and this was created on 28th of January. Okay, so let's see the next opportunity. This was created on 48,000 put, when the moment it break the previous day high against a risk of 48 rupees, the reward was 169 rupees. So the risk to reward that was standing out to be was 1:4. Right? So this is the fifth opportunity that the market has given. And this happened on 18th of January. Let us look at the next opportunity. So this is the next opportunity that was created, which was on 53,000 call, wherein the risk that was associated was 41 rupees after breaking the previous day high, and it did not touch the low of this candle, and it made the risk to reward of 1:3 on the next day. So though the risk to reward was actually good, if someone was holding it was wishing it for till 270, this is a reason wherein our rules come into picture, wherein if I am assuming that a person or an individual, once 1:3, according to the strategy that I have explained earlier and I have written notes, hopefully you would have took the screenshot. Once the risk to reward becomes 1:2, it is we will be doing either of these two things. One, we will be either trailing our profits or trailing the profits. Or the other thing that an individual is expected to do is bare minimum that his entry should be becoming his stop loss. So it might have taken away the stop loss on the third day. So in this scenario, either you are sitting on no profit and no loss, or you would have made a risk to reward of 1:3 once it was achieved. So let's look into the next opportunity. So this is the next opportunity that was created on 50,000 call. And this 50,000 call, and the opportunity was created on 17th of January. Okay, wherein the risk was 54 rupees once it broke the previous day high against a reward of 1:2. It is the same thing again. Either we will be holding our putting our stop loss here, and waiting for the target to be achieved. If someone was waiting for it, then naturally on the next day your our stop loss would have got triggered and you would have sitting with no loss and no profit scenario, or you would have achieved this 1:2 reward. Let's move to the next one. So on 48,000 put, which happened on 10th of January, wherein the risk was 68 rupees once it has broken the previous day high against a reward of 164 rupees. Okay, so the risk to reward was 1:2 and it was achieved. In fact, it did not just achieve that, it went all the way to till 1:4. It went much further, but still, as according to the rules, even if someone has booked their profits here, I'm assuming that they would have made at least 1:2. Now let's move to the next opportunity. So these are the opportunities that we will let go by, pass by, because it is not sitting according to our rules for the risk to reward ratio. Though the opportunity was triggered here, the risk that was associated was 97 rupees, against which the reward was just 91 rupees. So it was not even sitting with 1:1. So that is the reason for which we would have let go of this trade. This is the next opportunity that was created, wherein on 50,000 put against a risk of 74 rupees, the reward was 99 rupees. So one can assume that the risk to reward was either 1:1 or 1:1.3. Though the target was achieved, but still, as it did not sit well with our rules, wherein the risk to reward should be minimum 1:2, I am assuming that this we would have let go of this opportunity. And then this is another opportunity, wherein on 50,000 put happening on 30th December against a risk of 74 rupees, the reward was 99 rupees. Okay, though the risk to reward was 1:1.3, but still we would have let go of this opportunity because the risk to reward was not really that attractive. So is it the case that every time that this entire strategy is successful? No, it will come with its own flaws. Yes, there will be occasions on which we will be taking our stop losses. Let me show that as well. Here you can see on 50,000 call on 14th January or 50,000 call, wherein as the day high was broken, the risk was 87 rupees against a reward of 314. So obviously we would have executed the trade, but the very next candle would have taken away our stop loss. So this is a stop loss that we would have taken for once. Okay, so there is stop loss that has been triggered for once. Now, this is the second time on which the stop loss would have got triggered, wherein this happened on 48,000 put against once the previous day high was broken here at this particular candle. Okay, against a risk of 89 rupees, there was a reward of 165 rupees, which was 1:2. So as it is sitting according to our predetermined rules, we would have executed the trade, but before it actually rallied further and achieved the target on the next day, on the very next candle, here you can see, on the very next candle, it would have taken away our stop loss. Right? So in total, there are two occasions on which our stop loss got hit, and on the other occasions, we would have made profit had we just purely blindly followed this strategy. Now, let's try understanding that in total how many opportunities were created. As you can see very clearly here, that there have been 1, 2, 3, 4, 5, 6, 7, 8 opportunities wherein it turned out to be successful with a very good risk to reward of 1:15, 1:12, 1:10, 1:5, 1:4, 1:3, and at least assuming that on these both occasions you would have cleared with no loss and no profit. So you would have got at least 5 very good opportunities in the entire month. Okay, and on 2 occasions it would have got our stop loss would have got triggered and it would have got hit. And other 4 occasions wherein the risk to reward was not justifying, for which we wouldn't have executed the trades. So in total you can see very clearly that there were 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. In total there were 14 opportunities that were available in the market, of which 8 were successful. Okay, and 2 were stop losses. 2 times the stop loss was hit, and another 4 occasions either you would have booked your profit or you would have let go because the risk to reward was not justifying it. Hope I have made it this clear of the number of opportunities that if you are following this strategy, that how many opportunities that you would come by in an entire month. Okay, in the moving further, even today, in the yesterday's video as well, I have explained that there were already 2 opportunities that have already passed by in this month, and 1 opportunity has happened today. I hope you would go and see into the charts, look into the charts of Bank Nifty today, and then we will be further seeing that how many opportunities that this February month will be creating for us, and I will be uploading all the opportunities available from here on day-to-day basis. Thank you. And please feel free to write the comment section in the comment section if you have any doubts or any queries or any criticisms that you have against this strategy. I hope you do the research and try sharing this with your friends and with your families and with the other trading community members. Thank you so much, guys. Have a great day ahead.